The difference between this and this candlestick pattern can mean buying here versus here. But I haven't really seen anyone teach the exact techniques to find the best candlestick setups. So in this video, I will give you guys a 3-step formula that you can use before every single trade to take better trades and as a result, make more money. So let's not waste any time here. Without further ado, let's jump right into it. So first, I want you guys to look at this candlestick right here. It's the candle to the left on the thumbnail. And if you guys are familiar with candlestick patterns, you may notice that this candle right here is actually a bullish hammer. A bullish hammer is a candlestick with a small real body and a long lower wick. And this candlestick pattern actually indicates a reversal to the upside. But in this case, you can see that the exact opposite happened. The price didn't reverse, but instead we saw a sharp move towards the downside. But why did this happen? Well, to understand this move, we need to learn the 3-step formula I talked about in the intro. So I will return to this example very soon. But now, the first step we need to learn is something called candlestick analysis. And to learn this, I want you guys to focus on these 4 candles right here. When it comes to candlestick analysis, it's not enough to be able to analyze 1 or maybe 2 candles. We need to be able to analyze and take a look at multiple candlesticks together. So I want you guys to focus on these 4 candles together and think about them as a whole. We can see that the first red candle opened right here. And during the candle, it went up, it went down. During the next candle, the price moved something like this. It reached a lowest point all the way down here, right? But with the last candle, the price pushed up all the way to this point. So these 4 candles together opened around here. They closed all the way up here. They maybe reached a highest point around there, right? And a lowest point all the way down here. So if we look at these 4 candles together as one candle, we can actually see that these 4 candlesticks pretty much prints a bullish hammer, right? So after this short analysis, we can pretty much see that the example to the right and the example to the left on the thumbnail are both a hammer pattern. However, they are far from equal. On step 2 and 3, you will learn about some very important differences between these 2 patterns. But already here on step 1, we can actually notice a key difference. And that is the benefit of having multiple candles. Because when we have multiple candles that combines to one, we can actually get more information about the price. So for example, one thing we can notice here is the momentum. So if we take a look at the first candle, we can see that yes, the candle is red, but we are not really seeing strong momentum towards the downside. The same thing is true with the second candle. Here you can see that we have a spinning top candle, meaning that neither the bulls or the bears are in full control, and the third candle is also a spinning top candle. So even though the first 3 candles right here are bearish, they are not showing strong bearish momentum. However, if you take a look at the 4th and final candle, you can see that with this one, we are actually seeing strong bullish momentum towards the upside. To identify bullish momentum, I like to compare the body of the green candle compared to the bodies of the red candle. You can see that the green candle here, the real body of the green candle, is more than twice as large as all of this red candle, and that indicates stronger momentum. And seeing strong bullish momentum at the end of a hammer pattern combination is a bullish sign. So now when we have analyzed the individual candles, we're ready to move on to step 2, market structure. So when we are trading candlesticks and candlestick patterns, we never want to look at the candles in a vacuum. We always want to look at where on the chart is the pattern actually appearing. So we want to zoom out here and take a look at the context of the market. So one thing we can notice right away is that the market is in a downtrend, right? We're printing consecutive lower highs and we're also printing lower lows. And we can also notice that before the pattern appeared, we had a very strong movement towards the downside. But what we also can do here is that we can take one more step back here. Right now we are on the daily time frame, but if we switch the time frame here to the weekly, we can analyze the market from a longer term perspective. And here it starts to look super interesting, because as you can see at this level right here, the market printed a major low. If you take a close look at these two candles right here, you can actually see that we saw a bullish engulfing pattern coming in at this level, and looking even more to the left, we can see that this level also acted as a major high. So here on the weekly, we can actually mark some structure. So here on the longer term perspective, we can notice a very clear level from a market structure point. A major high that the price broke above and flipped to become support is now being tested as support once again. So now when we have some long-term structure to work with, we can switch back here to the daily, and if we want to, we can look back here and see how did the price react to this level. And you can see that we had 1 and 2 beautiful bounces here on the daily time frame. So this candlestick combination is appearing at a key level, and that is yet another bullish sign. We can also, if we want to, do a length of swing analysis. So we can take the measurement from the recent swing high to swing low, and we can actually take this measurement and measure from the latest high. And in downtrends, these moves, so this move right here and this move right here, tend to be, you know, around the same length. So this is yet another tool we can use, that this move right here is expected to reverse somewhere around here. You know, many times it will reverse a bit before, sometimes, like in this example, it will reverse a bit lower, but this is still something that can give you additional information and improve your trades. Step number 3 in our formula is something called follow through. And what do I mean by this? Well, after identifying our candlestick pattern, or like we did right here, our candlestick combination, we want the price to react according to our expectations. So for example, after seeing a bullish hammer or a combination that creates a bullish hammer, we expect the price to start to reverse. So we want the price to start climbing up after this pattern. Some traders will wait for another candle to confirm before they enter the trade. So for example, in this case, they would wait for this whole candle right here to confirm before they enter the trade. But in my opinion, you don't have to wait for the candle to close. It can be enough to wait for some follow through and enter, for example, right here. If using this method to enter, conservative traders might place the stop loss here just below that candle, but a more common way to place the stop is to actually set the stop below the lowest point of the pattern. This allows the price to actually pull back a bit here and test the support once again, and we can still make a profit. If we take a look at the exact same level, we can see that the price bounced, it came back, tested the level once again before it shot up. But your exact stop loss will depend a bit on what type of trader you are. The same thing is true for the target. Some traders used a fixed risk to reward, for example a 3-to-1, but what I prefer to do here is that I prefer to look at market structure to find reasonable exit points. For example, right here, we can see that the price indeed saw a reaction to the downside when it reached the high right here. So now when you know about the 3-step formula, you hopefully have at least a little bit better understanding of why this candlestick right here perhaps wasn't the best trade. From a pure candlestick analysis perspective, this trade right here doesn't look too bad. But if you look at the market structure, you can see that we are right now in the middle of an impulsive move down. And if we look a bit to the left here, you can see that we don't really have any market structures such as support and resistance to support our move. And last but not least, if we take a look at the follow through after this candle, we can see that right after the hammer, we saw a red candle, which is definitely not a good sign. So in this video, step 2 was all about market structure. And market structure is one of the most important skills you can learn as a trader. So if you guys have some time over, I highly recommend to watch my market structure course here on YouTube next.